All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market here gapping up today, and we'll go out and take a look at it. But before we do that, and I know it's 5 minutes early, but just going to go and knock out the challenge changes because there aren't any. If that changes in the 5 minutes when I get my scan up, then I will. I'll kind of backtrack and we'll go and we'll make a change. But as it sits right now, there are no new triggers on the board. In fact, there's not a whole lot that's close. Potentially CSX at the close here today, but there's not a lot that's close. And we just continue to kind of remain in this very low trigger environment. In the month of June, we've seen 1, 2, 3, 4, 5, 6, 7, 8 triggers in about 3 weeks. And, I'm looking for 3 to 5 triggers a week, so we're just slightly on the low side there of the triggers. But given the time of year, we know May, June, July, August, tend to be a little lighter on the triggers with the summertime period. So not too surprising, and we're not too far behind the pace. Now, I do have a position on Boeing here on the board. The option right now is 1130. Which is about where it was yesterday at this time, so a little bit lower. So we're down about $300 on that option, which kind of takes our Boeing trade to being up 2,000 instead of being up 2,300, as it is a piece that we pulled off of here. So we're not at the auto exit date. That would be tomorrow afternoon. Would be the auto exit date for Boeing if the option remains here in the red. But, in general, we're pretty lightly exposed. We don't have a ton on the board here. And, it's one that, with no new triggers, nothing really to get too excited about, here with it. Now, the market, we're about an hour into the day today after the Fed yesterday, and we saw some pretty interesting action come in. Not after the Fed yesterday, but after the markets closed. The Fed yesterday was kind of a mild reaction, and market kind of stayed up. We talked about that a little bit. Market vibe remained bullish, but then you see overnight S&P futures and what they start to do, and it's just a steady climb the entire night without any sort of pullback here. We saw global markets react very favorably to the Fed. Now you think about that and you go, okay, why would global markets react favorably? Well, one huge reason, and that is the U.S. dollar. The U.S. dollar, fell off again. If I pull up the euro versus the U.S. dollar here, you can see the euro last night climb all night. And, I don't think there's any coincidence that the U.S. market's pulling back a little bit right now and the euro is falling. Right, this is something that the world has not seen in a while. This kind of euro, this type of big move up in the euro, big move down in the dollar, and to me, that is the story of the Fed. I know it's all, that's everything else is going to be talked about for all sorts of different stuff. But the correlation of global equities to the euro and to the dollar, or negative correlation to the dollar, may be back. And maybe back in a big way. And back in 2012, 2013, 2014, we pretty much saw as goes the euro, so go the markets. And U.S. stocks, for long periods of time, they would gap. They would basically gap, and then they would just kind of hang out the rest of the day. They were reacting to moves in the euro dollar. The currency became a big driver here. And if we are talking about a sustained downturn in the U.S. dollar or a sustained upturn in the euro, we are going to see some major money rotation out there in the market. Now, we've talked about some of the places where this could be, some of the, iron ore, the Rios or the BHPs. But, this has a profound effect on some of the big laggards out there. the FCXs of the world, the Alcoas of the world, the Halliburtons of the world, these big laggards, which I'm not out there buying today because they're coming into a little bit of resistance area. But, some of these big laggards could be some of the leaders as we go forward throughout the rest of the year if the path of the dollar is down and the path of the euro is up. And that's Caterpillar, Deere, some of these big multinationals. IBM would be greatly benefited by a change there in the euro dollar macro trend, and so we see that coming or happening out here a little bit after the Fed, and to me that is the story. We see gold, obviously reacting sharply here to that as gold goes and hits a new high. We've talked about gold several times this year. It's something, you can trade, but trading gets choppy. And, we grabbed it for a nice gain for the challenge. But when it comes down to it, gold's about a large macro trend. And that large macro trend changed at the end of last year. We did see a little dip in March, April, May. But that dip has been bought up. It's been bought up aggressively, and it is something where I know when I talk about gold and I say, hey, we can see gold go a lot higher from here. It's kind of, you know what, probably not. It's got some resistance and all that. No, but we're seeing the environment change. Gold has managed to be flat, and chop through a long-term consolidation as the Fed has talked about rate hikes and as the Fed has increased rates over the last couple years. And now we're in a rate cut type environment, and gold tends to react very well or to trade very well in a rate cut environment. The last rate cut environment, quantitative easing environment, back here 2009, 2010, 2011. I know rates started to get cut here in 2008, but financial crisis, it wasn't the quantitative easing. Once we got into kind of some ridiculous low rate type environment, that's where we saw gold make a huge move to the upside. And then, as QE started to kind of fall off, the intensity of it started to fall off. We've seen gold consolidate for a long period of time, and this is a monthly chart. This is a 1, 2, 3, 4, 5, 6, 7 year consolidation in gold. This is not your, a couple week consolidation, so, it'll have a pop or two. This is a 7-year consolidation in gold. When you think about the tightness of this consolidation, the historic nature of this consolidation, and the level at which it's consolidating, to say, well, gold at 150, that's probably undershooting it. 160 is likely undershooting it. 180 is likely undershooting it. You go back to some of the gold bug arguments that were heard back here in 2005, 2006 about a big surge in gold. Those arguments actually make a lot more sense today than they did back here, and we haven't started hearing them yet. And as we start to hear them, it is going to drive gold higher. And to me, this is the most significant change from this Fed meeting. Is it creates or confirms a monster breakout in gold that isn't just about a short-term chart, isn't about even a daily chart, about a weekly, monthly monster 7-year breakout here in the precious metal. And something that, we've talked about different ways to play it, different ways to be involved in it. Long term, I've mentioned, some of my favorite, especially with, Barrick, GOLD. And kind of the idea of this thing going into the 20s, and so to me, this is what the Fed is about. This is the Fed post-Fed trade, right? I know everyone's all, well, what about equities and what about the market and what about all that? Yeah, all that comes into play, sure, but it's the euro dollar shift and the shift into things that are going to be positively affected by the euro rising and the dollar falling. And those are big multinational companies. Those that have yeah, those that kind of have earnings in euros that have to convert to dollars, it's going to kind of put a little bit of help on their earnings. We'll probably see IBM's earnings report, and you can see all the time with IBM. All right, the euro dollar, okay, if that shifts, IBM can get a big help. And this is a stock that's also been stuck in a 7-year consolidation? Interesting, right? 7-year consolidation for IBM, right? Now, the euro hasn't been, completely in a 7-year consolidation. Had this kind of real drop-off here in 2014, 2015. But, stocks or gold, IBM, some of these names that, are benefited by a stronger euro, we're starting to see some real life into them. IBM up almost 10% this month. How many months does IBM go up 10% and then not see further gains in the future? Very rarely. Very rarely. So, to me, that's the story. That's the idea. That's the play. And for me personally, stocks on my watch list that are more benefited by a stronger euro are kind of changing in terms of my perception of them and my willingness to want to go and to trade them. It also may put a little bit of a damper on some of the stuff that we talked about earlier this year that would be benefited by a higher dollar. KB Home, for example, some of these home builders, right, that have had very nice runs, they've done very well, but dollar drop, we could see some pullback into some of these, really domestic U.S. stocks, whose earnings are, U.S. dollar driven, and whose input values, are coming from, imports, and so the cost on some of these companies could be rising while the return, lowering on a relative basis. This isn't going to be an all-day, everyday thing. It's not going to be something where every day we look and we go, oh, okay, there's the shift. But this is a shift we're going to see happen over the next 6 to 8 months. And that is the catalyst that we saw yesterday. That is the meaning of the Fed and what we saw. And that is how it's going to affect going forward, right? Here utilities. Utilities is a very interesting one for investors right now. Dollar dropping, it makes utility stocks a little less valuable, right? But they're high yield, and we have yields, treasury yields going down. So the relative yield of utilities looks better. So it does put investors in an interesting position when it comes to some of the utility names, and I would not be surprised to see some massive chop here in the utility group, where we just see 3% drops, 3% pops because of kind of the way the macro factors are shaping out. It's a real positive on one side, real negative on another, and so it's going to have some of those pretty strong days. I'm very curious to see what some of the price action is going forward on a Procter & Gamble, on a Pepsi. Not that I'm wanting to trade them or anything right here right now, but does a weaker dollar start to help or start to hurt some of these companies? And some of these companies, most of their sales are international. And so they're sitting, Procter & Gamble's sitting near all-time highs. Most of their sales international. Now they're getting a help from a rising euro, falling dollar. Yeah, we could be talking about Procter & Gamble at 120 very, very quickly here. And, to me, that is the story. That is the story of the Fed. Okay? Now, for the challenge. And also, one of the things you'll probably see is next challenge, which will start in September. Next challenge, I will adjust the watch list. If we see this euro dollar shift shifting big, you'll see the watch list adjusted a little bit because there are some stocks that I will want in that have much better chances of trending in a higher euro, lower dollar type of environment. You'll see it a little more commodity based, a little more industrial based, there for the challenge watch list. We'll talk about that when we get out there, and if we see this kind of long-term trend continue to materialize. But I wanted to go through the challenge watch list here with you, just kind of show you where things are, because we haven't had a lot of signals, and frankly, there's not a lot that's very close. Right? And, this isn't something where, I wake up one day and I go, oh, okay, I like this trade, or I like this stock, or I like that one, or this one's going higher. No, I mean, one of the big parameters, and it's not an absolute must, but 95 to 98% of the time, it's got to happen to create a trigger. That is for the 3 and the 7-day moving average to cross. Now, down here below on these charts, I have a MACD, because it's kind of hard to see the 3 and the 7 on the chart. But the MACD, when it pushes above 0, that means that the 3-day moving average is crossing above the 7-day moving average in a bullish fashion. When it moves below 0, that means the 3 and the 7 are crossing down in a bearish fashion. Okay, and so I kind of need that trigger in order to get in. And you'll notice, this had a 3-7 crossover 5 days ago. And it's not going to have one today. It's not going to have one tomorrow. It's not going to have one anytime real soon here. In fact, it's more in danger of having a downside crossover. And so nowhere really close to giving any sort of signal or trigger to go and trade. And you'll notice a lot of stocks are in this position. Here's American Airlines. And a lot of these came off of new lows. So they didn't create triggers, right? We didn't need them to, because at this time we were trading the Disneys and the Visas and the the gold and Under Armours, right? We didn't have cash to even get into these had they signaled. But coming off of new lows to get an upside signal, we're just not going to see that very often. But is it close to a downside signal? Close to a downside 3-7 crossover? No, not really. Maybe in a few days, depending on how it goes. But that's kind of the theme out there. Apple, same thing, right? Amazon, same thing. Nowhere close to a fresh 3-7 crossover. Arconic, same thing. And Arconic, I even looked at the options the other day. We didn't get a bull signal, but, looked at the options on it. I think I may have to remove Arconic from the watch list just because the options, they're just not very good. We have Boeing, which we're in. We got a fresh 3-7 crossover here on what was that, Monday? Right, so we got in on Monday and still running here with that trade, but it's nowhere close to a fresh new trigger, anytime soon. If we look at Alibaba, same type of thing. Here we have Bank of America. What's interesting, been selling off, and you think about the Fed actions, and Bank of America prefers a higher dollar and higher interest rates. And, well, we see both going down. And that's a negative for a Bank of America. We could see a bear signal come in. You'll notice the 391 stochastics has not pushed back above 50. So if we do get a downside 3-7 cross, we could see a bearish signal come in. You'll notice we don't have that downside cross here just yet, coming into play here for it. Bristol Myers, we talked a lot about this one. We talked about this chart pattern and this breakout here and the bullishness of that. And it didn't trigger for the challenge, but I talked about it on that day. We kind of looked at it and said, hey, 49 to 50 is the price target for it. We've seen it a week later kind of push up into that area in a fairly bullish fashion, but it's not anywhere close to setting any kind of signal right here. Same with Caterpillar. You'll notice the 3 and the 7, they're pretty wide apart. It's not going to set a signal anytime soon. So when we look at just the first page of this, there's nothing that's even close. Perhaps Bank of America or American Airlines on the downside potentially, but there's just not a lot that's close. Chipotle Mexican Grill, not even close. Here's ConocoPhillips. Not even close, right? The 3 and the 7 are starting to widen. It's in its kind of relief rally stage. Yeah, we could get a bear signal come in, but even that's going to take 3 to 4 days, to happen. Okay, here's CSX. This one could trigger here today by the close. It was one that here on the open, it was just barely missing. Yeah, we'll see kind of where it sits at the close. I know it was knocked out yesterday as it went, and it was at my stop level. It broke back above that level very quickly during the day and pushed on higher. And yes, this is a trade where had we made it at the close of the day on Tuesday rather than the morning, we would not have been stopped out, and we'd still be running with it, right? And that is one of the things when I say, hey, the algorithm is a little more finely tuned to, kind of be a little more discriminating against morning entries and a little more favorable towards afternoon entries. This is one of the reasons why. Now, CSX, the trigger was there. It qualified. But, this is one of the reasons why is because, the chance of getting stopped out on morning entries is just a bit higher than on afternoon entries. So, CSX could here today. Here's Chevron, not even close to a signal, to moving anyway. Delta, could potentially be a bearish signal on a downside crossover, but nowhere close to any kind of upside. Triple D, which is going off the watch list. The options are just too ridiculous to even consider. Here's Disney, just consolidating. If it has a downside 3-7 cross, it's not going to trigger bearish coming off of a new high. I'd love to see it pull on back a little bit, give a nice little fresh 3-7 crossover to the upside. That would sure be nice and would be definitely playable there. But that's not going to happen, anytime super soon. EOG Resources, same thing, right? So you'll just notice, whether we go from Facebook to FCX, it's a lot of things are just kind of in that very same pattern where they're nowhere close to setting a signal here. Gold nowhere close. Barrick nowhere close, and that's one of the things as I look at the watch list and I look at trading over the next little bit. It does concern me. All right, are we going to have anything to, really get into? Is it going to be a dry day, dry few days? And it could be a dry few days, given everything that, or given how all these charts look and how all these stocks look. And, that is just something that, we'll have to deal with. JP Morgan could trigger on the downside, right, with Bank of America. Those could potentially trigger. Coca-Cola could potentially trigger on the downside if it were to fade from here, but it would take a pretty hard move lower. But Vegas Sands, not even close. MGM, not even close. And I know I'm scrolling through these pretty fast. But Triple M, not even close here, with just the way that they are trading. Altria, this is one that could trigger bullish on the next 3-7 crossover to the upside. So this one, could come into play. It's also a very interesting chart pattern. Lower highs and lower lows, right? This channel. Now it's kind of coming off the top. It didn't trigger bearish the other day, which kind of caught my eye. But if it's able to kind of hold on here and start to tick back up off of a higher low for the first time, that could be very playable, back into the mid-50s. So that's one that could be close. Microsoft, not even close. Something like a Micron, the next 3-7 downside crossover could trigger bearish here on it. But Netflix, not even close. But most of these, we're looking at a very small batch of stocks that are close, here in the next couple days. And other than that, most things just kind of need either some time, some shifting, to happen, here with them. And we can see it go either way. And see the signals come in either direction, but most things just aren't setting fresh, brand new signals, and so we may have a few few dry days. Twitter here could potentially signal bearish. This is one that I was kind of surprised the other morning that it didn't trigger bullish, and it pulled on back throughout the day and never ultimately triggered, and does have that 3-7 action going on it. It's been selling off since I got on video because it wasn't showing a downside 3-7 cross. It still isn't. I guess it didn't ever have an upside 3-7 cross, so to have a downside 3-7 cross is going to be difficult. But this is one that could potentially be a trigger even without it, just because of the way that it is moved. But again, those are very rare. We see Under Armour. We were able to grab Under Armour back here, and take advantage of the pop here on it. And, it's drifted slowly higher since, but nowhere close to a signal. UPS, same type of thing. Visa, same type of thing. And Valero, Vulcan, just not even close there. The last one here, Verizon. This has a 3-7 downside crossover coming in on it, and it could potentially be a signal. The movement rate here is high, or the consolidation risk is low, so there is a pretty good chance of seeing a solid move here. We could see this trigger here in the next day or two, or even this afternoon. But my point here, right, less than 10% of these names are anywhere close to a trigger, right? Less than 10%. And, even as I see the market gap up, and I see some of these like U.S. Steel gap up, it's, okay, they're just in some suspect chart positions right now. And they're in positions, more importantly, that for the challenge, they're not highly predictable or high probability positions. Predictable is not the right word. High probability positions, to be able to say, well, the probability that this moves 2 average true ranges or 4 average true ranges to the upside or the downside is significantly greater than the probability of it going flat. Right now, those probabilities of flat are significantly elevated compared to the probabilities of trend for the majority of the stocks there. Okay, so I'm hoping that we have a few signals to kind of grind us through here a little bit until we start to see a few more shape up. But that's nothing new than what this challenge has been since the beginning. It has been kind of a low signal environment. We've been able to kind of still be able to grind and still be able to do very well here in the challenge. Up to this point, and we'll take trades as they come in, and as they trigger, and run with them. Okay, so hopefully that helps to kind of give a little bit of perspective of where things are and what things are doing, and how they are trading. Before I hop off, last thing here, Boeing. Just have a note here from Michelle to talk about that. Boeing here, as far as for the challenge, there's no change to be made, right? It's not at its stop level, not at its profit level. The time stop level, or the time stop time, is tomorrow afternoon. So we still have a few sessions here before that hits. This is just something where we talk about it. After a 2 average true range move, the price stability just isn't very high. And this is traded within, about a 10-point range. Yesterday, or 12-point range. Yesterday was kind of annoying, to see the market end near its highs and to see Boeing end on its low. And then, we see the market gap up and Boeing just, doesn't really get a whole lot in it. It is a little bit of pause here. We did see some, elevated volume yesterday, but it wasn't like the upside volume from the day prior. And look, it's not uncommon for Boeing, and it doesn't mean that the stock can't go higher. I mean, we saw Boeing, have the big gap up. The next day, kind of lag the market and drag, high volume. The next day, nothing, and then 2 days later, pop, again. And it's just something where the probabilities suggest higher, the patterns suggest higher. But at the same time, this is the market, and anything can happen at any time. And so, we'll just run with it the way the challenge is set. It's also still trading above the upper Bollinger Band, which is always a good sign, there for it. But, there's a lot of news swirling in the air show and the airplane orders, and yesterday we get the news that pilots are concerned that they don't have the strength to for one of the fail safes, and there's a lot of news, but it's Boeing. There's always a ton of news. It just doesn't stop. It's constant, and just one of those where I don't think the news is something worth making a decision on, and for a challenge trade. And when I look at the news from an investment standpoint, I do think Boeing has turned a little bit of a corner when it comes to the big drop right back here. But if we come in and we take a look at, let's see here if I can get in here. There we go. We come in and we chart some of the fundamentals here. And I'm just pulling up their revenue over the last 10 years, right? Maybe. There we go. Revenue over the last 10 years. I mean, their revenue all-time highs, right? No, it's still in a pretty good spot. If we look at something like a price to sales ratio, and kind of compare that on here. Its price to sales ratio is pretty high, but its price to sales ratio kind of always trades with the price of the stock, so that's not something investors make a decision on. If we look at price to book value here on Boeing, it's all over the place, and that has everything to do with their airplanes and how everything is tracked. If we look at a PE ratio here, right? And we look at just pure PE ratio, it's about what it is normally, right? 21. It's always going to be a little bit high because it's a premium name, premium brand, and so it's just one where there's nothing on it fundamentally that's amazing, and nothing that's really detracting here from it. And so something that could easily trade into the 420 area, something that easily could trade into the 320 area as well, given what the current fundamentals are. And so not something that I'm jumping into from an investment side or anything like that, but I'll continue to run with my challenge trade right there with it. Okay, so hopefully that helps there. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.